Hello guys, welcome to the Trading Parrot. Wow, I'm just gonna do a quick review of the charts today. We are seeing some good progress and I wanna share my thoughts on how these things are going. And well, as you can see on Monday, it was such a big fake out to the downside. We were below that 30, looking like we were going to fake out on the daily. But I encourage you to wait until candle close. And as you can see, we closed at 32. After that, the responsibility of the price was what? To go to 45, to close at 46. And that is pretty much what we did. We closed at 44.91 last night. And we started today again pointing upwards. So that means that potentially we are not even done with this wave to the upside in here. On the daily, we have had so far a wave up, one down, and one up on the momentum. So now the responsibility of the price, believe it or not, is to continue this to produce a fifth wave. That is an impulsive wave, according to Elliott waves and all those lunatics. We need to continue that thing, right? So otherwise, this could be just a free wave count, and that is where the risk is. So that's just another perspective to say that now we are facing very important resistance. We got done with the 91.5, and that was a tough one. Done in a way, right? So because this was the resistance, this was the previous support in 2025. You can see it there on the left hand side of the chart, and we are potentially today closing the first daily candle above that orange line. Not just that, but we are potentially coming back inside the falling wedge and forming a double bottom on the daily and more clearly on the 4 hour. So this candle today, guys, is the one that has the responsibility to confirm or invalidate a liquidity hand. Let me explain that. This is today's candle. Currently it's in green. It is above a neckline. It is in the breakout daily area. If this candle closes like this, we will have stopped the shorts. We will have basically inflict so much damage because basically it's closing beyond the neckline and is putting them in massive fear. Fear of what? Fear of this closing there and confirming that the double bottom is going to point into the 100K area. And there's so many people there with a short, chewing strong, hugging their pillow and sweating cold overnight, thinking, let's not close this candle in green. Let's close it in red. Let's see a rejection against the 91.5. Let's close below that, push the price back below the neckline, produce a new low against 80. Let's continue with the carnage. I'm part of them. I want that actually. Don't blame me. That's just my strategy. It's nothing personal. But if we continue in this trajectory, we're going to potentially confirm this breakout, and then we're going to have to be talking about that rally into 100K. That is maybe good news for you. Let me know in the comments. I don't know what's your strategy, but personally, as I told you, I prefer that we go lower. But day by day, I'm getting less chances of fulfilling my wish, which is to go below 80, and more chances that we complete the double bottom and that we start dealing with these fair value gaps up until 102.2. Let's look at other aspects. Well, you can see the 4 hour is all over the place. Still, some things are clear to me in the 4 hour. That we just deal with this order block at 93. We got a rejection so far. It's just a pinch. It's too early to say that it's a heavy rejection because it hasn't pulled back at all yet. So we cannot really measure the impact of the rejection so far. But we have gotten into forming the bigger pattern. You can see I have a neckline right there at 93.6. At that point, we get a big double bottom that you can see on the lower end on the screen. What is the target of that? The technical is 107, and the RSI of the top of the range is at 104.4. So we also have in all that range anchor VWAPs to all-time highs. They are ranging between 107 to 102. So everything above 100K is starting early to become a potential next target. In terms of the CPR, look at this. Isn't it magic? First day, first pivot, tested. Second day, second pivot, tested, holding the first pivot, and everything looks like we're doing what we were supposed to do, right? So to lose virginity. Now, it's more than just a humble virginity losing exercise, right? Because we didn't just touch the first, we touched the second one, and we could be touching the third one, potentially. What's the third one? The third one is 96K. If we close above 96K and we hold it, okay, we could continue that rally according to CPR into 108. So that is another indicator that says reclaim these areas, reclaim this band between 96 and 100K, and I will give you as a reward that extra potential upside. It starts becoming from being 0% likely into being 30, 40, and as we continue looking at the charts, we start seeing more check boxes that start bringing in that potential target as a reality. Of course, general markets can always puke and destroy the probabilities, slash them, divide them by 100, and suddenly we don't have a single chance. But from the technicals, we continue to do what we need to do. So at 95K, we have that liquidity, and we are right at this precise moment, at the moment of the first impact. We took around 10% of it. They're still on the table a lot, and that's why now we need to concentrate, because we need to read between lines on what's going on in here. If we get an ugly rejection and we leave on the table that red, that means that something fundamental broke in the technical structure, and we're not going to continue. If we stay around here, and let me define that around here, if we stay above 90 on all this move, there can be some violent moves because we are liquidating shorts, and they tend to scream a lot, they tend to kick and have tantrums, and the price reacts to that. The price comes back down as a counter effect to the liquidation. That is just the nature of a liquidation. That is acceptable. What we cannot afford is losing 90, going to 88, 89. That's gray area. That is, why are we there? Why are we there? Something broke. If we stay above 90, we could continue, waka-walking this 95K. This time is like a Pac-Man, eating that liquidity. And if you start seeing that the price goes into 97, where you see a depression in the liquidity, that could give an early hint that we are going there, not because of the liquidity of 96, but possibly because of the liquidity of 100. So things can continue going very fast. And speaking about speed, let's go back to the fair value gaps. Remember that we have now completed the vacuum that we used to have. I don't know if you can see it, from 94 to 91, there's a vacuum there of 3K, and we have pretty much finished that. We are at 94 high. We got $400 more, and we can pay a visit to the upper fair value gaps. Now, let's speak about risk, because we cannot just talk about, shiny things and Santa Claus and Christmas gifts. We need to also sit down and put on the table the chances of this failing. We need to assess what is the risk of that. From the point of view of fair value gaps, we went up as fast as we went down. So obviously that speed left fair value gaps on the table. And there's a chunky one below 90 to around 87.6. That is the one I don't want to mess with. I don't want to go there. I don't want to go below 90. Why? Because we have on the table at the moment a double bottom. If you go to 87, you destroy that pattern as well, and you can say that this attempt to re-enter the falling wedge was failed. Or because it's just too far there, it's kind of gray area. It's not that we cannot go to 87 and not attempt it again. It's just that we slash again that opportunity likelihood in half. We can form a triangle, yeah, that can still succeed, fair enough. Yeah, but to be honest, my dream now is that we get a rejection from here, we get pushed back down, and we actually consume all the way to 85, and ideally that we break the previous low of 83. Yeah, sure, people are gonna comment, please don't say those scenarios. I hate it. I hated being at the low 80s. Personally, if you are averaging down, you start thinking different. You start thinking, where is my volatility that is going to allow me to exit rather than direction of the price? Yeah, I want to exit from the upper end. I want to go up, but I want to go up loaded in momentum with an average that is distant enough to, make a win. What is my ultimate goal? The break even, not the profits, the break even. I want to be market neutral. I want to be lock a profit in a stop loss in the exchange, and then let Christmas give me whatever gift it wants to give me. It will always be in the positive. But we are still not there. There's still work to do, and we need to think strategically in the next few days, particularly if we go into the upper end on the 100K. Let's go very quickly into some news. Let's look at the order book. In here we have a 92K, an order of 3K, a 92.5, 1K, and we are battling at the moment thinner orders on the upper end. So potentially this is still not done. I have no clue where the price is gonna go, no clue. I'm not trading with certainties. I'm an absolute idiot in internet just with a phone talking by himself in a parking space. So trade, it's your own responsibility what you do. This is just my point of view. Bitcoin spot ETFs, we got some positive inflows, so that's good. Not very big, to be honest. Ethereum upgrade goes live today. Key features include peer DAS technology, reducing validator bandwidth by 85%, block gas limit. Yesterday we have absolute crazy moves in terms of the taker on Ethereum. People were literally panic buying Ethereum for some reason. So that could be partially the positiveness of the market, general markets, Bitcoin moving up, but maybe combined with this upgrade that apparently goes live today. In terms of macro, the FOMC meeting next week, 87% implied probability of 25 basis points. We have also the dollar weakness that is under 100. I still think that is going to kick up a few more times. The momentum still hasn't broken in a substantial way for me to indicate that that's the opposite. We got today employment report, so that's going to bring in some volatility. And on Friday, we also have some other reports that could imply as well whether we get the 25 basis points or we get more or we get nothing. Everything can change based on that, but I suspect that that's not going to be the case. I suspect that everything is priced in and we're going into that target of 25 basis points, but I cannot see really the future. There's no reason for me to know the future. It's just my opinion. Well activity and on-chain signals. Liquidation flash. We are liquidating shorts like crazy. You can hear them in the streets. Well behavior, mixed signals. I've seen mixed signals because the long-term holders are selling, and on the other end, there's some aggressive buying going on. Recent well activity shows 500 million withdrawn from exchanges in the past 48 hours. So yeah, that's a decent one. And we got downside risk. These are levels. I don't care about the levels. Trading considerations for day traders. Bullish factors, 7%, 24-hour gain. Vanguard institutional access, returning ETF inflows. I heard that Vanguard had a heck of a lot of volume coming in on the first days, so that's amazing. Some bearish factors, 26% below the all-time high. Long-term holder distribution, I already mentioned that to you. Intraday scenarios, breakout play, clean break above 93. We do want that. We don't want a rejection at 93. I mentioned that too. I didn't read it. This is coming from other people. So some other people are thinking the same. Maybe they're doing their own analysis. Yeah, let's leave it there. This is just technicals and we don't care about that. I hope you enjoyed the video. Hit the like, subscribe, write down a comment down below, and I'll see you later. I'm gonna spend the day in the swimming pool, gym, doing some nice stuff. It's a good day. Enjoy your day. I'll see you on the next time. Bye bye.